Hello everyone and welcome to another midweek technical outlook here at xm.com. Markets remain unsettled as the Middle East conflict widens, with rising oil prices and a stronger dollar, which gains on heightened inflationary risks, keeping various instruments under pressure. Today we will be looking at euro-dollar, which is hovering near 3-month lows, gold, which remains under pressure near the 5,100 level, and Bitcoin, which pulled back from the range top near the 70,000 level to trade back within its multi-month consolidation. Now let's start with euro-dollar, which is extending a 3-day pullback from the short-term uptrend line and the 200-day SMA to trade near the 3-month low near the 1.1520 level. A drop below this strong support could target the November 21st swing low near the 1.1490 level, followed by the November 5th low near the 1.1467 level. Now, should it manage to rebound from the November lows, then immediate resistance might come from the January 19th low near the 1.1575 level, followed by strong resistance near the 1.1670 level, and higher up by the 20-day SMA near the 1.17000 level. Now, the momentum indicators are reflecting the bearish bias, which is intact in the near term, with the MACD overextended to the downside and below its zero line, and the RSI sliding toward the oversold threshold, suggesting that should selling pressure become exhausted, a rebound could still take place. Now, let's also have a look at gold, which is trading within this narrow band between the 5,100 and the 5,250 since late February. Now, should it manage to rebound off the 20-day SMA, then immediate resistance might come from the 5,250 level, followed by the 5,342 level, which is the 78.6% Fibonacci of the pullback from the record high notched in late January to the February 2nd low, and higher up from the 5,420 level, which is the monthly high. A break above this level could then target record territory. Now, to the downside, support below the key 20-day SMA lies at the 5,000 psychological mark, which is a key level to watch, followed by the 50-day SMA near the 4,900 level. Now, despite this consolidation, the bias for gold is firmly bullish. It's above all key SMAs and the long-term ascending trend line. The momentum indicators are reflecting this consolidation periods, but still holding in positive territories, with the MACD above zero and marginally below its red signal line, reflecting this sideways trading, and the RSI flatlining just above the 50 neutral threshold. Now, let's also have a look at Bitcoin. Bitcoin has been testing a breakout of this multi-month range in the last few sessions. However, it's been failing to decisively break above the key 70,900 level. That said, it's trading in the upper Bollinger Band, and also in the upper part of this range for the last few sessions. So there is some upside momentum. That said, it's still firmly, the bearish bias still holds, as it's still hovering 43% below its record high. Now, should it manage to break out of this range, then immediate resistance might come from the 50-day SMA converging with the upper Bollinger Band near the 72,500 level, followed by the 74,471 level, which is the 38.2% Fibonacci of the retracement from the mid-January highs to the February 6th low. Higher up, it could target the 70,000 level before it could then test the key support at the 80,615 level, which is a key area to watch for traders. It's has been cupping intermittently losses since late 2024, so this is a key level to watch for a sustained upside. But to the downside, immediate resistance still lies near the mid Bollinger Band and 20-day SMA near the 67,900 level, followed by the 67,400 level and the 62,500 level, which is the range floor. And The key test to the downside remains the 60,000 psychological mark, which was last touched on the 6th of February, and a break below this level could then accelerate a downside. Now, the momentum indicators are reflecting the upside attempts within this range, with the RSI flatlining at the 50 neutral threshold, but the MACD rising toward the upside, but still below zero, but above its red signal line. So the bias for Bitcoin is bearish for now, but we have seen some upside in the last few sessions, which is reviving hopes for a range breakout for now. Now that's all for today's market wrap. Thank you for watching.